India, one of the oldest countries in the world. A land full of history, culture and nature. But few know that India has also been the largest economy of the world for nearly 2 millennia, from the 1st to the 19th century. Things have changed a lot since then. How's the Indian economy going today? Before starting, I remind you that in the description there is a brief guide for beginners, with an explanation of all the indicators used. So, if you are not an expert in economics, don't worry, just read the guide. And now, let's get started. And do not forget to subscribe and leave a comment if you like the video. India is located in South Asia and is the 7th largest country in the world. Independent India was born at midnight on August 14, 1947, a date that Salman Rushdie's famous novel, The Children of Midnight, brought into the collective literary imagination. The country is today a parliamentary, multi-party and federal republic, which includes 28 member states and 7 territories, governed with diversified degrees of autonomy, and thanks to its vast territory, India has a large variety of raw materials and natural resources, which have contributed to the rapid development of the economy in the last decades. India has the 2nd largest population in the world just behind China, but it is forecasted that by 2028, India will overtake China, becoming the most populous country in the world. Today, the Indian population corresponds to the 18% of the total world population, a truly huge number. India's economy is among the largest in the world, ranking 5th in terms of nominal GDP, and 3rd in terms of GDP, PPP, after China and the United States. One of the most relevant aspects of the Indian economy is that about 2/3 of GDP derive from the informal economy, present in all sectors, even if the majority is concentrated in agriculture. The informal economy comprises most of the myriad of family micro-enterprises which are not registered and outside the direct control of the state, and produce goods and services for the main purpose of generating employment and income for the family, and which constitute the most common form of activity in the country. Unlike total GDP, India's GDP per capita is very low, both nominal and purchasing power, occupying the 139th and 121st positions respectively. This is due to the fact that Indian development has been unbalanced, both from a territorial point of view, between city and countryside and between states, and socially. Its benefits have largely gone to the few super-rich, and to a growing middle class with a Western level of consumption, while the living standards of the majority of the population have stagnated or even worsened, as they tragically seem to show. For example, the numbers of suicides for deaths among farmers, 182,000 between 1997 and 2007, according to official data, which many believe are underestimated. The development of the last decades has been accompanied by massive structural changes that have seen a reduction in the relative importance of agriculture, and an increase in the relative weight of industry, around 28% of GDP, and the tertiary sector, over 50%. Only partial, however, with the effects on the sectoral composition of employment, mostly still concentrated in activities related to agriculture. The Indian economy is expanding with very high annual growth rates, considered by many to be an economic miracle. The long-term growth outlook for the Indian economy remains positive, due to its young population, and the corresponding ratio of low dependence, healthy savings and investment rates. According to the 2017 PricewaterhouseCoopers report, Indian GDP at purchasing power parity could exceed that of the United States by 2050. 30 years are not so many, and, as Keynes said, in the long run anything can happen. The economy has expanded rapidly during the 2000s. During 2009-2013, growth averaged 7%. The country was relatively unaffected by the global economic downturn of 2008-2009. Growth dipped in 2008 to 3.9%, but grew strongly again in 2009 and 2010. From 2011 it moderated but continued at more than 5%, and in the last 5 years India was the world's fastest growing major economy, even surpassing China. In the early 2000s, public debt in India was increasing, but in the last decade, it has been very stable at around 68% of GDP, and is expected to decline slightly over the next 4 years. From this point of view, the Indian economy is very stable, and public debt does not seem to pose a problem for the economy, despite its relatively high levels. Unemployment in India is low. Historically, in the past 20 years, it has been around 2–3%. An important factor that contributes to keeping unemployment levels low is the availability of work at competitive costs, which attracts investment in the Indian manufacturing sector. Thanks also to a literacy rate of 74% and the spread of the English language, a thriving service outsourcing industry has developed in India. Inflation in India generally occurs as a result of commodities traded globally, and the numerous efforts made by the Indian Central Bank to weaken the rupee against the dollar. In fact, when the US dollar shrinks, the Indian Central Bank gives a huge injection of dollars into the economy, making it highly liquid, and this further triggers inflation of non-traded goods. Therefore, the central bank tries to support exports with a weak dollar exchange rate, but this is an extremely dangerous inflationary policy that has made the inflation rate volatile over the last 2 decades, ranging between 2% to 10%. Until the liberalization of 1991, India was largely and intentionally isolated from world markets to protect its economy and achieve self-sufficiency. During that time, the average tariffs exceeded 200%, and there were large quantitative restrictions on imports. Foreign investments were strictly limited to allow only Indian corporate ownership. Since liberalization, the value of India's international trade has increased sharply, with the contribution of total trade in goods and services to the GDP rising from 16% in 1990 to 47% in 2009. However, despite this, the Indian current account balance has always been negative for 17 years, and is expected to decline further, as imports are increasing faster than exports. And with this we have concluded the analysis of the economy. Now, it's time to evaluate how strong it is. India is a country that has enormous potential but is facing equally great problems. If on the one hand the economy has grown at exponential levels in the last decades, it is also true that this growth has resulted in a growing social inequality, bringing tangible benefits to only a minority part of the population, and this can be seen in particular from the very low GDP per capita, both nominal and PPP. Public debt, although stable, remains high, and the current account balance is expected to continue to decline, as the demand for foreign goods grows higher than exports. Unemployment, on the other hand, is at good levels, as well as inflation for now, and economic growth is very high, and is expected to remain so. If India wants to strengthen its economy even more, it will have to focus on making its growth fair. This will benefit everyone.